Good afternoon, traders. It's Bill Baruch with Blue Line Futures and it's your midday market minute. We're seeing panic settle in on markets. The S&P, it's dove below 3,200, hit a low about 31.21. The Nasdaq, it's cracked through 8,900. So what are some of the levels? But first, I want to say you got to pick your spots. No one knows out there. We've seen December 2018 where the fear continued, liquidity started to tighten up, and then the market fell a lot more. So what no one really knows, and if they do tell you they know, they're lying. But what you can do is, again, pick your spots, be patient, know your levels. For the S&P, that's 30.35 to 30.50 for us. That's a previous high and a 10% correction. You also have the 200-day moving average there. Now, the Nasdaq has a lot of levels to the downside. I mean, there's 87.80 is about a 10% correction. You have a level at 8,600, you have 85.50. So really, for the Nasdaq, that's a lot more volatile. We want to look at just more of a big range there, 85.5 up to 8,700. And we could see that tested if the panic starts to continue. And then look at crude oil. That's another one here that if it breaks down could hurt the stock market. 49 is a huge level of crude oil. We closed below 49. We're breaking a trend line going all the way back to February of 2016. Yeah, you remember that? So those are some big levels to watch here on the risk assets. Now, safe havens, gold. Gold is actually having a pretty bad session, not hanging in very well. Yesterday's move, I mean, we really had a 2 to 3 day run in gold that really just surprised, I think, almost everybody. So the price action settling in. It's pretty healthy here. 1645, that's our major 3-star support. But if we start to see stocks bounce back, we can see gold come in here a bit, or the dollar bounce back. We'll get to that in a second. But if we see risk assets bounce back, gold could take a hit. Now it could bring gold quickly down to 1610, 1598. So those are some levels we'd actually love to buy gold. Now, another safe haven assets are treasuries. The 30-year bond is just ripping higher. If we stay above 166 in a 30-year bond, believe it or not, it paints a path of least resistance to 176. Yeah, if we stay below 2% in the yields, we have a path of least resistance to about 137, 1.37% in the 30-year bond. So that's something to kind of keep an eye on. But again, this matters what happens with stocks. We do continue to find a path of least resistance higher in the treasury market, but we don't want to chase things. I mean, you can't just chase this price action. For the 10-year, if it stays above about 132.5, we paves a path of least resistance to 136, and that's below 2%, or sorry, that's below 1.5%. If we stay below 1.5%, we could see a yield in the 10-year over time down to 88. That's not 188, that's 0.88. So keep an eye on a lot of these numbers here because ultimately it's where these markets stay in direction. Now, we're not bearish the S&P at all. We want to be buyers. We would love to be buyers at 30.50. In fact, we're going to allocate assets at that point. So keep an eye on all this, but what we're talking about is if this fear continues, just know your levels, know where the path of least resistance of things are. Don't start picking tops in treasuries because, as we said, path of least resistance higher can be up to those areas. Now take a look at the currencies. The dollar is weaker today, but the dollar is in an uptrend. So the dollar has a lot of support down at about 98.30. That's the dollar index. Keep an eye on that. That's where we like to be a buyer in the dollar. As for the euro is bouncing back here today, but the euro is in a downtrend. We got the resistance in the euro, 109.80, 110.10. So keep an eye on those levels. That's where we like to sell the euro. The yen's bouncing back and the Swiss is bouncing back. We don't really like the yen, and we missed the boat on that. In hindsight, it was an easy trade buying that washout. But the yen has resistance, 91.36. Keep an eye on that area. The Swiss, resistance at 103. We like the Swiss. We like to see the Swiss close back above 103, stay above 103, and get us excited for a bigger move. So there's a lot going on out there. But what you really have to remember is pick your spots. Stay with your game plan. Give us a call. We're here to help you with that game plan. 312-278-0500. Remember, futures trading involves substantial risk of loss. Is not suitable for all investors.